Today, I want to talk about how even more short sellers have been losing not just billions of dollars, but hundreds of billions, and how, as a result, the largest pension fund in the United States is in big trouble. So stay tuned and let's make some money. And now I'll dive straight in with the key information. So, first, let's talk about how even more short sellers have been losing billions and blowing investors' cash. Crystal Ball tweeted saying B. Riley has been blowing investors' money. He said, "How do you post a net loss of over $75 million when you've got record revenues?" He said, "That tells me either your costs are rising or you have some massive realised losses." Saying either the cost of spoofing AMC and other stocks every day, or they've just recognised some of their giant losers. So you can see from B. Riley's financials, they recorded record total revenues of $462 million in Q3, up 48% year over year. But a net loss of $75.8 million. So they made $462 million and lost over $500 million in one quarter. And that was primarily driven by unrealised investment losses related to changes in mark-to-market valuations on equities portfolios. AK basically saying they've got massive unrealised losses on their stock investments or their stock short positions. Now, I could only hazard a guess and wonder at which kind of stocks are causing these massive unrealised losses for B. Riley Financial. So as a result of these short sellers in these hedge funds making record revenues but making even larger losses, the largest pension fund in the United States is in big trouble. So Gold Telegraph tweeted saying, breaking news, the United States' second largest pension fund may borrow more than $30 billion cash to help it maintain liquidity without having to sell assets at fire sale prices. So this basically means the US's second largest pension fund currently cannot meet its margin requirements. And to do so, instead of selling tons and tons of assets at rock bottom prices, they're going to borrow even more cash. Now again, that sounds pretty risky to me, borrowing even more money to bury themselves even deeper into the hole. Especially as they don't just have to borrow a few $1 million or $1 or $2 billion, they have to borrow $30 billion. That means they're currently failing margin requirements by $30 billion. And instead of selling off those assets to meet those margin requirements, they're just going to borrow even more money and take on even more debt. Now you might say, hang on, Tom, where's the source for that? Is that some trust me bro information, or is there an actual article or an actual source to support that? Well, this Bloomberg article is saying kohrs seeks to borrow more than $30 billion to manage cash. And as a result is borrowing against 10% of its entire portfolio under this new policy, which just adds to the growing trend of pensions adopting riskier investment strategies. So kohrs stands for the California State Teachers Retirement System, the country's second largest pension fund, who is going to have to borrow $30 billion cash to meet margin requirements. And that's because many of these hedge funds that obviously invest the money on behalf of these pension funds have been taking on significant losses. And therefore, as a result, these retirement systems, these pension funds like the California State Teachers Retirement System have been losing billions. And are therefore having to borrow even more money to make sure they can still meet margin requirements to ensure their entire portfolios aren't liquidated. Hedge funds losing their own money is one thing. Hedge funds losing the money of wealthy billionaires is another thing. But hedge funds losing the money of innocent retirees is, in my view, just criminal. The individual teachers in this retirement system don't get to choose where their money's invested. They don't get to choose which hedge fund it goes to, and they don't get to choose which stock it's invested into. And yet, their money is being stolen and lost by these hedge funds. I can also safely say today was the best day we've ever had in the Millionaire Mindset Trading Group. S to the P took out $13,000 today in just one trade. Arif also made $250 on SPEC. Holden had 65% gains on a SPY call option, and B also doubled his money, making over $200 on an AMD call option too. On top of that, tons of people in the group today capitalised and locked in profits. Again, just today alone. And what's most important, these aren't just lucky trades that happen once a month. You see these screenshots every single day of people in the group making tons of money. And it's also the same names popping up every single day, making money day in, day out, every single day. So you guys need to join the Millionaire Mindset trading group, linked in the description below, to get daily profits like S to the P makes, making $13,000 a day. You may say, well, Tom, surely these shorts aren't down on AMC, but just look at the proof that's in the pudding. These hedge funds all around the US are taking on massive losses due to unrealized investment losses related to changes in mark-to-market valuations on their stocks. And what's really worrying is this tweet from Susan Trimbarth. She tweeted saying, in total, as at 30th of September 2023, the DTCC reported $0.077 trillion in the Guarantee Clearing Fund to cover $2.3 trillion guaranteed open positions. So basically the DTCC is operating with about 3% cash collateral or 3% margin. This just shows how poorly capitalized the DTCC specifically is, and if one member of the DTCC goes down, everyone will be affected. There is money to pay for the squeeze, and that squeeze will indeed be paid for. It will just be an absolute mess amongst the banks, because the DTCC is holding such little actual cash in person to cover those open positions. That's why Kristen tweeted saying counterfeit shares are flooding our financial system and now regulators have a huge mess. She said there is no transparency. They have no idea how big the fraud really is. Susan Trimbarth posted a statement on Twitter saying there is $12 billion protecting $250 billion in IOUs. Saying this is going to end poorly, saying if the stocks all go up by that $250 billion, it could be $500 billion or $1 trillion on just $12 billion in actual cash support. This is why even the regulators are trying to take the side of these hedge funds, because if and when something blows up, it could potentially destroy the entire system or be at least a massive headache for the regulators, for the DTCC and for the banks to resolve. And that's why many prime brokers or market makers try and avoid the responsibility from creating synthetic shares. So from Apex Clearing's financial statements, they've stated they have no responsibility for auditing or determining stock counterfeiting. It says here, Apex Clearing maintains the books and records required by law and business practice. The fully disclosed clearing agreement does not encompass transactions in investments other than marketable securities. But regardless of whether our account has been introduced by a broker-dealer or registered investment advisor, Apex Clearing does not control, audit, or otherwise supervise the activities of your firm or its employees. Saying Apex does not even verify information provided by your firm regarding your account or your transactions processed for your account. Saying Apex does not undertake responsibilities for reviewing the appropriateness of transactions entered by your firm on your behalf. Basically, Apex Clearing is trying to absolve themselves of any creation of any synthetic shares. You'll remember there was that lawsuit that came out fairly recently saying that broker-dealers are likely to be held accountable for their customers' actions. And this is Apex Clearing trying to abstain or absolve from that responsibility. So basically, when they get caught in the future, they can say, we had no idea how many synthetics were being created. That wasn't our problem or our responsibility. It seems these institutions, hedge funds, market makers, shorts, prime brokers, broker-dealers, and whoever else is involved, even the regulators, just seem to be trying to pass the blame between each other, never taking responsibility. I think that really is why it's taken so long for something to be done about synthetic shorting, or why nothing has been done so far about those synthetics, because everyone absolves themselves from the responsibility, even the regulators. The regulators are saying, look, we're self-regulatory organisations, it's their responsibility to do the right thing. And then you've got these broker-dealers, market makers, hedge funds and everyone else saying, we don't even review the data, we just submit the data as requested. Nobody takes responsibility, and that's why nothing is done about those synthetics. And on a slight side note or a slight tangent, 741 Trey has just found the first bank to pay a fine in 2024. You guessed it, it's UBS. Ever since UBS took over Credit Suisse, or were effectively forced to take over Credit Suisse, they've had nothing but problems. They've been dealing with Credit Suisse's malfeasance and their malpractice and their giant risky derivatives time bomb. They're being fined left, right and centre, and it really wouldn't surprise me at this point if UBS is the next to collapse. Now, interestingly, PK Lance also tweeted about the new upcoming iconic music event coming to AMC theatres on the 21st of March 2024. You may have seen this screenshot or this new film release for an untitled iconic music event, 21st of March 2024. So it seems like yet another massively revenue and profit generative concert is in the works for AMC. And speaking of which, Adam Aaron has confirmed that Taylor Swift has generated a whopping $261 million globally at the box office. Obviously, AMC is going to receive a massive portion of that revenue, obviously holding the rights to over 40% of the income. On top of that, AMC will also be raking in tons and tons of money on concession sales as well for those theatre showings. Saying now at $261.6 million globally, AMC's first ever released film, Taylor Swift: The Eras Tour, just became the highest grossing concert film and highest grossing documentary film of all time. As I've touched on in previous videos, more and more revenues will lead to more and more profits, which will lead to more and more cash flow, which will lead to a new all-time high in the AMC stock price. But guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.